Did anyone notice the market selling off big time towards the end of the day today, and even down in after hours about 0.1%? Well, there's something called MOC. It stands for market on close, and these are the last orders that go in at 3:50 p.m. Eastern Standard Time, the last 10 minutes of trading, and they're either buyers or sellers. Well, it's telling you the indifference of the two. And there was $5.5 billion additional to the sell side today. That's a huge number. Now, typically you only get a number like that heading into or after a big catalyst. And, well, here in the next couple of hours, we're going to have an event that has not happened in about 17 years. It will be happening today. The problem here is nobody really knows what's going to happen. Everyone knows this could be a bad event. Everyone knows this could be a nothing burger. We just have no idea. I'll do my best to break this down and put it into context. If this turns out to be a big deal, well, you'll have a little bit of a heads up here in this video and what could inevitably happen if something bad happens to our markets. With that said, we will also go over Tesla's over 6% rally today. And again, I am expecting downside in our market, specifically coming on Wednesday when we get a new summary of economic projections from Fed Jerome Powell. I think we're in for a little bit of a rug pull. I mean, Tesla was very bullish today. Does that change anything? I think that's what a lot of people are wondering. If we do see a sell-off in our markets, is Tesla going to crater again? Is Tesla going to hit new lows for 2024? Or could Tesla hold up a little bit better now that the sentiment seemed to have changed a little bit today? I'll go over that with you in this video, at least my expectations. And last but not least, Nvidia just had their GTC conference and Jensen Huang just spoke. A couple notable things to point out there. Before we get into all of this information, hit that like button as well as subscribe to the channel because it is free 99 and costs you absolutely nothing to do so. And let's get started. Now, we are going to talk about Tesla quite extensively here in this video because I think that is something we need to talk about. I don't think a lot of us expected a 6% plus rally based on the news that we got over this weekend that Tesla was raising prices by $1,000 on the Model Y. They were raising prices about 2,000 euros over in Europe coming on March 22nd, and the $1,000 price increase in the US on April 1st, which coincidentally is my birthday. Tesla said April Fools to everyone that thought they were going to get a Tesla for cheaper, that the next move from Tesla as far as pricing was going to be a price reduction. Indeed, you are wrong. But how did this ultimately change Tesla stock? We'll go over that here in this video. I do want to start though with this event that has not taken place in 17 years. A lot of you guys weren't invested in 2007, myself included. So I have no background kind of experience with this. This is a first for me, and this is a first for a lot of people in the markets as well. And really, if you ask Wall Street, it's like a coin toss. Nobody really knows what the Bank of Japan is ultimately going to do, let alone what it'll do to our markets. But this is one of those events that could have a huge negative impact on markets, or maybe positive impact. Now, I think I need to provide a little bit of context here. Japan has not seen inflation for a very long time, for decades. They were in deflation. Their population was aging. They were not spending a lot of money. So capital in Japan from Japanese investors went to other markets because you couldn't get any yield on bonds. The Japanese stock market wasn't doing much of anything. Well, now the Japanese market is hitting all-time highs. The Japanese government, essentially, the Fed, is about to start raising rates. Now, currently, the Japanese federal funds rate is negative 0.1%. Now they're expected to raise that to 0 or to about 0.1%. The Bank of Japan is notoriously known for surprising investors. People have thought that the Bank of Japan was going to raise rates for months now. Literally like a year now, we were talking about the Bank of Japan potentially raising rates, how that could be a disaster for the markets. So we don't even know for sure if the Bank of Japan is going to raise rates, but according to Japanese Fed funds swaps, they're pricing at about an 80% chance the Bank of Japan raises rates. So if they don't, it's going to be a big surprise and could be a bullish event for our markets. Because with that kind of background in mind, well, what does it mean if the Bank of Japan starts to raise rates and there's all this extra money out there that is in foreign markets? It might pull that money back into Japanese markets. And that's a problem because Japan, specifically for the US, that's a problem. Japan is the single largest owner of US debt. They own 14.52% of all US debt outstanding, worth about $1.1 trillion. China owns $769 billion worth of U.S. debt, about 10.17% of foreign debt owned. So this is not the total, right? There's $34 trillion, $35 trillion of U.S. debt, but out of the foreign debt owners, which is about 30% of that $35 trillion, 14.5% is owned just by Japan alone, and it is a substantial quantity. So fun fact, if you ever hear anyone say China owns the US, or we're like super in debt to China, that's true, but really it's Japan that owns the US, if anyone. And Japan only owns $1.1 trillion of our debt out of $35 trillion. So mainly who really owns the US is you, because over 70% of US debt is held by the public. But that's really neither here or there. That doesn't even matter. Just a fun fact. The effect this could have is twofold on two different important markets for the US. That is the US bond market and the dollar. Now, I've went over the dollar a lot before, so I'm going to assume you guys have a decent understanding of the dollar's relationship to our markets. But if you don't, let me break this down as simply as possible. If you are Tesla and you are taking in Japanese yen, Chinese yuan, if you're taking in sterlings and pounds and euros and all these other currencies when you do business, but you're a US company, you report your earnings in US dollars, not in Japanese yen. So those currencies have to get converted back to the dollar. So if the dollar is high, if this chart is high, the simplest way to put it, if you're taking in Japanese yen or Chinese yuan or any other currency, odds are those currencies are weak. If the dollar is high, foreign currencies are weak, right? So what happens? You convert that money back to the dollar. If the dollar's high, you get less dollars. That's a FX headwind. You'll hear a lot of companies, you heard a lot of companies in 2022. Every single company was talking about FX headwinds, right? That was hurting numbers. They would say like 6% or 10%, whatever the number was. Depending on how big of a multinational you are, your number is going to change. But that's the point. If you're converting weak currency to a strong dollar, well, you get less dollars. That's bad for earnings. That's bad for revenue. That's bad for everything. If the dollar is low, if this chart is low, then your foreign currencies are likely stronger or higher, and then you convert those foreign currencies to dollars, you get more dollars because the dollar is weaker, and you have better earnings. FX headwinds are not really a thing, right? If the dollar's low. So go back to the Roni Rona. Back in 2020 in March, what happened, right? The dollar spiked initially, rushed to safety, whatever. The dollar proceeded to fall over the next 12, 24 months. So no wonder stocks did well in 2020 and 2021. The dollar fell. Look at this chart. The dollar freaking plummeted for many, many months. And then the dollar kind of stabilized at low levels. That's fine. The dollar rose 20% in 2022. This right here. No wonder the markets had a rough time. And preceded 2022 was a fall in the dollar as the Fed was maybe getting closer to the ending of the rate hikes, right? Which the last rate hike was in July. The Fed has been paused since then. But what happened? The dollar fell. So 2023 was bit of a rough year for some areas like small caps, better year for multinationals, large companies that control the broader markets. Fine, okay. The dollar bottomed back here on July 13th. What happened to the NASDAQ and the S&P on roughly July 13th, right? The NASDAQ went up 3 more days after that. But what happened on July 18th, the NASDAQ peaked and you went into a 10.5% correction. Well, what did the dollar do, right? And let me find the dollar. The dollar rose, right? So some would say the dollar, well, can have a huge effect on the markets, like almost down to the exact day. The dollar rose, stocks fell 10.5%. What happened? The dollar peaked on November 2nd. What happened to the NASDAQ? Well, let's go back. On November 2nd, you were like 2 days into the start of this, what is almost 6-month rally in our markets, right? So, yeah, the dollar falling again was positive. What happened on December 28th? What happened on December 28th? The dollar started to rise. That should have meant stocks fell. That did not happen. But if you look at the percent of stocks above their 50-day moving average, indeed the average stock actually started to fall on exactly December 28th. Now, why am I bringing this up? Why does this matter? Well, if the third largest economy in the world, the owner of the most US Treasury starts to raise rates, that should have an effect of making the Japanese yen stronger, right? As the Fed is raising rates, just like what happened with the Fed in 2022 in the US. The Fed was raising rates. The dollar was super strong in 2022. So in theory, if the Japanese Fed raises rates, strong Japanese yen, potentially weaker dollar, that could be really good for markets. To the contrary, that $4 trillion of Japanese money that is in money market accounts, in US treasuries, in the US stock market, some of that money may start to leave the US markets and go back to Japan, and that's very problematic. Because this is a chart of TLT. It is the 20-year bond ETF. It really incorporates the 10-year, the 30-year, and the 20-year, okay? Just long duration treasuries. Well, if you see selling pressure from Japanese investors selling US treasuries, that's going to bring this down. The TLT is going to fall. Treasury prices are going to fall. When treasury prices fall, bond yields rise. Okay, so that's the real question. Do Japanese investors rush out of US treasuries, or does nothing happen? If they rush out of US treasuries, treasuries are going to sell off, and treasury yields are going to rocket higher, and that's a problem. Now, we may have seen some of this effect today, actually. We had no news of significant importance, nothing that happened that should have moved the bond markets, but TLT was down 1/3%. 10-year treasuries rose almost 4 basis points, which is a pretty medium-sized move. It's not like a tiny move, but it's not a huge move, right? Some Fed days you'll get 10+ basis point moves. 4 basis points or close to that we've seen today in the 10-year treasury to the upside is quite a large move for no news. Now, again, we have had recent inflation reports also come in hot, and that has caused TLT to be red like 8 days in a row. So there is also other things at play. You also have our Fed meeting on Wednesday. So it's hard to tell if this move down in TLT today, this move higher in yields, was based on the Bank of Japan tonight or Powell on Wednesday, probably a combination of both. Now, the tricky part with the Bank of Japan interest rate hike that we're expecting today is the Bank of Japan loves to surprise people. So you might not get a hike, or you may get a 50 basis point hike. You just really don't know. If you were to see a 50 basis point hike, that would probably be a black swan event. You'd probably see a lot of money leave treasuries. You'd get a big problem here in the US. I'm almost certain of it. But you're only expecting 0.1% move here from the Bank of Japan. Is that going to be a big deal? It could be. We just don't know. It hasn't happened in 17 years. Or it could be absolutely nothing at all. Now, next up, briefly, before we talk about Tesla stock, we all know the importance of Nvidia and this AI trade in our markets. I personally believe a lot of Nvidia's run-up since their last earnings has really been this buy the rumors, sell the news mentality or trading logic behind this GTC conference that just took place today. Now, Nvidia is down about 1.5%. Following Jensen Huang that just spoke at that Conference. Now, does this get worse from here? Does it turn into a nasty day for Nvidia coming tomorrow? Does it turn around? I don't know. Two things notable to really point out in terms of the stock itself. Nvidia announced this Blackwell chip. They were expected to do so. These B100s, everyone's been talking about them. Nvidia has the H100s right now that sell for anywhere from $25,000 to $40,000. The reason they sell for that much is because everyone wants to get their hands on these H100s, and there's not enough of them. The MSRP is way lower than where these Hopper chips, these H100s, are selling for right now. Well, they're coming out with these Blackwell chips, and Jensen Huang says this is really a platform, not just a chip. And Nvidia is creating this new product called NIM, which stands for Nvidia Inference Microservice, and they're adding it to their Nvidia Enterprise software subscription. So it's basically a platform that enables companies to better launch their AI products. Not exactly sure if this will, ever amount to anything. We don't know pricing on this. We don't know the use cases for this. A lot of unknowns there. But a lot of investors are disappointed because we did not hear prices for the Blackwell chips. We did not hear what demand might look like for these Blackwell chips. We didn't hear anything really specific to fundamentals with these Blackwell chips. No pricing, no demand outlook, nothing along those lines, let alone margin implications, right? So that's a little bit of a disappointment. Probably a good reason to sell the news, which I wouldn't be surprised if the selling picks up in Nvidia, but I don't think we'll know for sure until tomorrow morning when you actually see the cash open start trading. A lot of funds, they don't trade in after hours. So if you're going to get a sell the rumor event, well, it's probably going to be tomorrow morning. And that could give the markets some downside as well. The NASDAQ is down 0.15%. Nvidia being over 5% of that index weighting, it's definitely having an effect. So let's talk Tesla, because I think that's on everyone's mind. Now, I want to be clear. Nothing has changed with this 1% move today in the NASDAQ. In fact, it's actually pretty spectacular because on Friday, you were bearish, right? You broke under this downtrending line of support in this bullish channel that you have had ever since really November. You finally broke down. Things were not looking good. And then today you had the big update. At one point, the NASDAQ was up like 1.5%, and you were doing pretty well. You were back in this bullish channel. Well, not by the end of the day, okay? By the end of the day, you actually close under this line again. So that's a really, really bad sign that you were not able to get a close above this line. Nvidia, mine's on Nvidia for whatever reason. The NASDAQ would have needed to close at about 438.21 today, roughly in that area, to stay above this important line. The triple Q right now is at 436.73. So you're almost $2 lower than that right now. So that's not a great sign heading into tomorrow and heading into Wednesday. Now, the big event is going to be Powell on Wednesday. Now, I don't think Powell's going to go straight back to the Fed needs to raise rates. I don't think we're going to take that leap, but I do think the dot plot is going to show one rate cut priced in from the Fed. That's down from the 2 to 3 rate cuts that was priced in at the last summary of economic projections, known as the dot plot. And I do think the Fed's going to have to make it very clear to the markets. The Fed will raise rates again if they need to. Again, the Fed's not going to lead with that as their base case, right? The Fed's not going to come out and say they're expecting to raise rates again. They're not going to say that. But Powell in the press conference at 2:30 p.m. on Wednesday, he's going to make it clear that they will raise rates again. The Fed has spent the last couple of months saying, we think we're at peak policy for the Fed funds rate. The next move is a cut. The Fed has to come out and kind of retract that on Wednesday based on the recent inflation data that we got. So unfortunately, I do think Tesla stock is going lower from here. But today, nonetheless, was a very good day. It really sets us up in an optimal position heading into what could be bearishness in our markets, because now you're a decent ways off of that 160 level that we were just at. So now you have a little bit more cushion. Maybe the downside is a little bit less. If Tesla were to fall 6% or so, you would be back to about what, 163 and a half, right? $163.50 or so. And that's a little bit more cushion. Whereas if you were sitting at where you were on Friday, and let's say Tesla stock were to fall 6%, that would put you down well into the 150s. That would put you at like 154 or so. So the same 6%, let's call it 6% theoretical move lower, that could happen on Wednesday if the Fed is bearish. That just puts you back to where you were on Friday, instead of sending you back into a new low for 2024. Now, I think we do get, unfortunately, like a 10% correction in our market. So I'm still forecasting Tesla could fall to about 150. I'm still not going to deviate from that, but today definitely makes it a lot better. And I think it puts Tesla back on the radar a little bit for investors to say, maybe things are not going to be as bad as we thought. Maybe Tesla's margins have actually bottomed. Maybe the margins are actually going to get better. At the bare minimum, Tesla raising prices is a lot different from the Tesla we used to see cutting prices. And it's basically saying we're probably not going to get a price cut for a while, if at all. Tesla's actively working to preserve margins. And again, that's just a lot different from anything that we have seen previously. Now, as far as option activity from hedge funds and institutions, I would expect this, but you're slightly negative. You have a positive order value of 47%. You have seen about 900 orders totaling $314 million today. So it was a low dollar amount worth of option activity from hedge funds and institutions in Tesla specifically, with a slightly negative overall skew to those positions. I would expect that because Tesla was up 6%, and just because you get one bit of good news, you're not going to get the shorts to let up on their shorting activities. Cost to borrow fees today still about 10%, right? So cost to borrow fees 10%, that suggests there's a lot of shorts still trying to take on short positions in Tesla stock. But I do believe, and I want to make this very clear, that small cap stocks and interest rate sensitive names, they are way better priced for any downside in our markets from here. Jerome Powell being overly hawkish. It wouldn't surprise me if the triple Qs sold off a lot more than Tesla specifically. Let's say the triple Qs were down, I don't know, 5%. It wouldn't surprise me if Tesla was down 3% or down 5%, whereas Tesla normally is like double the triple Qs. So normally Tesla will, if the triple Qs, let's say, were down 4% in a day, Tesla would be down like 8%, 7-8%. It usually 2x is what the NASDAQ does. Now, I don't exactly think that's what's going to happen because you've already seen so much downside. So I think Tesla, in a weird way at this point, could be a little bit of a hedge. I would still expect it to fall. I'm still expecting it to fall, but I think it's going to fall less than, let's say, a 10% correction in the NASDAQ itself. 10% lower from here. Let's just say there's a 1-to-1 ratio. NASDAQ falls 10%, Tesla falls 10%. That means Tesla stock from here would fall to about $157 per share. So this 6% move today really did cushion any potential downside that we see in Tesla. But don't be confused. I'm not going to flip-flop. I still think we are in for a little bit of a rug pull coming on Wednesday, and that becomes problematic. Now, sentiment indicators for Tesla still very negative. Relative strength, your RSI, is at 40.37. Neutral is at 50, like I explained in the last video. So you're far from even neutral. So you're still pretty dang bearish, which again, you're probably better priced for downside in the markets if you're Tesla or your interest rate sensitive names, small cap stocks. Look at a Fubo or a SoFi. Like, businesses doing just fine. SoFi is red hot. You cannot nitpick anything wrong with SoFi's last earnings, or really SoFi's earnings over the past year or two. Everything has been better than expected. Literally across the board. SoFi just gave guidance that would put SoFi's 2026 PE multiple at about 9 today. And Wall Street still doesn't want to own it. That's because you went from pricing in 7 rate cuts down to 3. Now you're down to, I believe, 2. Did I hear that? I think I heard that today. The markets are only pricing in 2 rate cuts in 2024. We'll go ahead and see what the latest Fed funds swap looks like for December. No, you're still pricing in 1, 2, 3 rate cuts in 2024, but you're pretty close to only pricing in 2. Again, if you have to start pricing in maybe a hike, yeah, that's a problem. But again, Tesla and other areas of the markets are already better priced for that. Their stocks, their equities have already traded down substantially. So we'll have to wait and see Nvidia continuing to get pretty smashed here in after hours. It may be safe to say this was a sell the news event after all. Nvidia's down almost 2%. I think you really want to wait and see what happens tomorrow morning, though. We also do have XPeng earnings tomorrow morning, and that could affect Tesla. Again, if you get any positive insight or negative insight to demand in China for EVs, for vehicles in general, or just the overall state of the consumer, you know, that could be positive for Tesla, even if it's XPeng that's having good results. You also seen some data coming out from China that was better than expected overnight tonight, and that also did help our markets do a little bit better today, and I'm sure that did have a positive impact to Tesla stock as well today. We also have some pretty good news as well here in after hours. Singer Sierra, who has 51 million followers across all platforms, has also taken delivery of a Tesla Cybertruck, again helping to contribute to the halo effect. And this was probably Tesla's plan all along. Make a vehicle that is so unique and bulletproof, why have you. I mean, that probably comes in handy if you are a celebrity and you get people that love or hate you, right? I'm not going to go into depth on that, but that's probably another appealing aspect of the Cybertruck. But create this product people feel like they need to own because it's unique. Let them post on social media about it, create a halo effect. That was genius. Probably years in the planning with Tesla or from Tesla and Elon. So let me know what you think about this information down below in the comment section. Nvidia continues to get drilled here in after hours, pushing down the NASDAQ or the triple Qs about 0.25%. So it's even getting worse in the time we've started filming this video. You were only down 0.1%. Now you're down 0.25%. So we'll see what happens later on tonight. If anything crazy happens, Bank of Japan can be a little bit crazy and unpredictable. I'll bring you guys a video later on tonight explaining any new developments. I'm not counting on it because who knows, right? It might just be what we're expecting, small little change to the Japanese federal funds rate. Maybe it's not a big deal, but if they surprise us and they raise like 25, 50 basis points, you know, I'll bring you guys that information. So don't worry on that. I'll keep you guys posted. In the meantime, hit the like button as well as subscribe to the channel. Hopefully you guys learned something in this video as well. Again, with the TLT and dollar explanations. Hopefully that taught you guys something that you can take away with you forever. So hit the like button, subscribe to the channel because they're free 99. If you guys want to come trade with us live in real time, check out that link down below in the description of this video. If there is a week to potentially hedge out your portfolio, I have a feeling it's this week. And also, go ahead and follow the X account. It's Michael Tyler over there. Also cost you nothing to do so. You guys have a fantastic rest of your day, and I will see you in the next one.